Okay, so here we go. So this is what a lot of people completely get wrong with investing. And this is going to be a great example of what they don't understand about it. And what this is this is Hims stocks, and we're going to watch what happens. So you come through here, and you're going to start investing at $10. You're going to buy $10, and $10, it ain't going to change much, right? For the first the first year. But then all of a sudden it just shoots up, right? Shoots up. And you have it shoots up to 20, 23, 20, almost $24, right? So, I mean, that's a huge gain. And then it just completely shoots back down, right? Shoots back down to the point that you're buying it below what you originally bought it for $10. And so maybe it pops up here and you're like, okay, I got lucky, I'm going to sell it, right? And that would be like the dumbest thing to do. And that's what people do. I was a bag holder, right? For forever. I was a bag holder, they say. Shoots up here and maybe you got lucky. And look, you become a bag holder again, and you're just a bag holder for the long. Look at this, $5. I mean, you lost over 50% of your money. Look at that, 4. I mean, you're just losing money. You're just losing money in this stock. And people think you're a bag holder when you do something like this, right? But even if you were 100% Hims, right? If you were 100%. And say you started, we'll say you started with 1,000, or we'll say 2,000. Maybe you had $2,000 saved up, and you decided to start investing. So you went all in on Hims stock, and you're going to contribute $200 a month, and we'll see what happens. So people say you're a bag holder, right? But this is how much you're going to outperform the S&P 500. You're going to have 79,000 compared to 24,000. All right. I mean, this is a huge, huge difference that people aren't, factoring in, right?
Exactly.
It's stuff that people aren't seeing.
ABC cookie?
And I mean, even at one point, right? I mean, even at one point, Hims stock, it just completely shot up, right?
What letters?
And this is what this is actually showing, but it's going into February or March, so it came back down, right? So you're really at like 40, 42, 65, 42. That's really where you'd be back at. I don't, but it shot up tremendously. But this is what they talk about when they're talking about like being a bag holder. I mean, you're just acquiring all these stocks. And now this is if you're 100%, right? Now, what if you just allocated it to part of your portfolio? Maybe you were Hims, and maybe you got into, Celsius energy drink. Maybe you got into Elf Beauty, right? Maybe you got into Nike, Nike stock. And maybe you got into Nvidia, right? And you allocated them all at 20% each. So now you have a diverse portfolio in 5 companies. They're all equally balanced, right? And we'll see what happens. Now, see, look at this, right? Now you're at, 86,000 versus 24. And these are just like, I mean, these are high risk, high reward companies. You know what I mean? That's what people are going to tell you. They're high risk, high reward. Well, you got a big reward if you invested in them. But if you go and you look at these stocks, you know, like at hemp stock, people would have said you're a bag holder, right? And you can scroll down and you can look at how these stocks return. Like Hims returned a ridiculous amount of money. Nike, you lost money. You lost, $3,000 with. Elf Beauty, you gained, roughly 4,000. Celsius was 6,500. Nvidia was 30,000, but Hims stock was the best performing, $32,000. Now think about that. This Hims beat Nvidia in this portfolio, but if you go and you look at the stock on Hims, you would have been a bag holder for nearly four years, right? That's what people would say, that you're a bag holder, but you're just acquiring the shares as you go, and because you're rebalancing, some of those stocks that run up, right? Like Celsius was running up, Elf was running up. You're rebalancing those back to these equal weights. You're buying low and you're selling high. And all you are is rebalancing. You don't really have to do much. It's not like you're throwing, extra money into it.